There is a pile of dollars so large it could fund entire economies, more than 14 trillion of them, and almost none of it sits inside the United States. It lives offshore, on the books of banks the Federal Reserve does not directly control. Traders call this money Eurodollars. Most people have never heard the word, but when this hidden dollar system freezes, that is when global crises begin. Here is why this matters to you, even if you never leave your own country. The dollar is not just America's currency, it is the world's. Companies in Brazil, Korea, and Nigeria borrow in dollars, trade in oil, ships, and chips is priced in dollars. But most of those dollars are not created by the Fed. They are created offshore, by private banks lending dollars to each other far from American soil. That is the payoff to hold on to early. The world runs on dollars that America does not print and cannot fully see. When they are plentiful, global finance feels calm. When they vanish, everything downstream tightens at once. Let's rewind to how this started. In the 1950s, during the Cold War, the Soviet Union held dollars but feared keeping them in American banks where they could be frozen. So they parked those dollars in London instead. A dollar deposit sitting in a European bank outside American jurisdiction. That was the first Eurodollar. The name stuck, even though today these offshore dollars sit everywhere from Tokyo to the Cayman Islands. London banks realized they could take these dollar deposits and lend them out as dollar loans without ever touching the American banking system. No reserve requirements, no Fed oversight. A parallel dollar system was born. It grew because it was useful. A company in Asia that needed dollars could get them faster and cheaper offshore. By today, the Bank for International Settlements estimates dollar credit to borrowers outside the United States at more than $14 trillion, which raises the obvious question. If the Fed did not create these dollars, then who controls them when things go wrong? Here is the machine. When a bank inside the United States runs short of dollars, it has a lender of last resort. The Federal Reserve can create dollars and lend them in an emergency. That is the backstop that stops a normal squeeze from becoming a collapse. Now look at the offshore system. A bank in Singapore or London can also create a dollar liability. When it lends dollars to a client, it writes a dollar deposit into existence, just like an onshore bank does. The difference is brutal in a crisis. That offshore bank has no direct line to the Federal Reserve. If its dollar depositors want their money back all at once, it cannot simply call the Fed for fresh dollars. It has to find real dollars in the market fast. On a calm day, that is easy. Banks lend dollars to each other overnight without a second thought. But on a fearful day, everyone wants dollars and nobody wants to lend them. The price of borrowing dollars offshore spikes. This is a dollar shortage, not a shortage of a foreign currency, a shortage of the world's own reserve currency. In the one place the people who print it cannot easily reach. That is the hidden fault line under global finance. This is not a museum piece. The offshore dollar system is bigger and faster growing than ever. In early 2025, dollar credit to non-banks outside America stood at about $13.7 trillion. By the end of the year, it had climbed to $14.3 trillion, growing at more than 8% a year, the fastest pace in over a decade. And we have watched what happens when it seizes. In 2008 and again in the 2020 panic, the offshore dollar market froze. The Federal Reserve had to open emergency swap lines, effectively lending dollars to other central banks so they could pass them to their own banks. The Fed became the world's dollar lender, precisely because the ghost money it never created was the thing that broke. So here's the lens to carry away. The dollar has two lives, one onshore, backstopped by the Fed, one offshore, vast and largely on its own. Most of the time the two feel like the same currency, but in a scare, they come apart. The offshore dollar gets scarce and expensive, while the onshore world still looks fine. That gap is one of the earliest warning signs in global markets. So the next time you hear that some faraway bank or country is under stress, ask a simple question. Is this really about them? Or is it about a shortage of dollars they cannot print? That is not a forecast. It is a way of seeing where the pressure truly sits. This channel explains how markets work. It is educational, not financial advice.